In today's video, we dive into a significant shift in the currency market. The US dollar to Japanese yen has plummeted by 3%, landing in the 159 area. But what prompted Japan's Ministry of Finance to potentially stage a massive currency intervention just before the Bank of Japan's policy decision? And what does this mean for global markets? Is this a permanent shift for the yen or merely a brief respite? Stay tuned as we unpack these crucial questions. So, why is this news making waves around the globe? Just before this dramatic drop, US dollar to Japanese yen was trading at a high of 163.74. This persistent weakness in the yen had put immense pressure on Japanese authorities to act decisively. The sudden decline marks the largest single-day surge for the Japanese yen since 2022. By conducting a suspected intervention right before a central bank rate decision, the Ministry of Finance is making a bold tactical move to curb rapid currency depreciation and buy some time for stability. Let's break down the details of this move. US dollar to Japanese yen experienced a dramatic collapse, plunging from 163.74 to 160.09, and further into the 159.5 to 159.0 range. This translates to a staggering drop of about 2.5% to 3% in just 6 hours. Market analysts suggest that this sudden drop has all the hallmarks of a direct intervention by the Ministry of Finance. This intense volatility comes just ahead of tomorrow's Bank of Japan policy announcement, where interest rates are widely expected to remain steady at 1%. As the news broke, market participants and currency traders on X reacted instantly. The sharp decline caught many off guard, slamming carry trade positions that depend on low yen yields. Traders noted that while this early intervention by Japanese officials may provide temporary relief, the long-term strength of the yen will depend on the tone set by the central bank in tomorrow's announcements. Discussions quickly shifted to focus on Governor Ueda's upcoming press conference and the outlook report. From the perspective of professional analysts, this move seems to be an attempt by authorities to stabilize exchange rates right before the monetary policy announcement. With the Bank of Japan likely to keep rates steady at 1%, financial institutions are emphasizing that forward guidance will be key. The tone of Governor Ueda regarding potential future rate hikes and the central bank's stance on currency weakness will play a crucial role in determining whether US dollar to Japanese yen remains around 159 or rebounds sharply. The impact of this rapid 3% surge in the yen is being felt across Japanese equities. Export-heavy sectors, which benefited from the previous yen weakness, are now facing short-term profit-taking as exchange gains cool off. Conversely, domestic-focused companies and import-reliant sectors are finding immediate cost relief from a stronger yen. Investors are closely watching to see if US dollar to Japanese yen stabilizes before making any new commitments ahead of important corporate earnings. On a global scale, the rapid strengthening of the yen puts pressure on popular foreign exchange carry trades. Investors who borrow low-yielding yen to purchase higher-yielding global assets must adjust their positions, leading to short-term volatility across global risk assets. However, market observers suggest that if the BOJ provides clear guidance or if yen volatility stabilizes, this could offer temporary bullish relief for US equity markets by alleviating currency uncertainties. For individual investors, managing heightened risk during suspected intervention periods is crucial. Trading directly into sudden currency movements can lead to significant slippage. Instead of reacting impulsively to sharp price swings, traders should concentrate on Governor Ueda's forthcoming message and the BOJ outlook report. Keeping a close eye on official central bank guidance is far more important than chasing after initial intervention spikes. Now, let's explore 3 potential scenarios following this intervention. In our base scenario, the BOJ holds rates at 1% with a neutral to balanced tone, allowing US dollar to Japanese yen to consolidate in the 158 to 161 range as markets digest this move. In a hawkish scenario, Governor Ueda signals readiness for future rate hikes, pushing US dollar to Japanese yen down toward 155 and bolstering yen strength. Conversely, in a dovish scenario, the BOJ takes a cautious stance on future hikes, causing intervention gains to fade as US dollar to Japanese yen climbs back toward 163. To summarize today's key points, first, the suspected intervention by the Ministry of Finance has driven US dollar to Japanese yen down by 3% to 159. Second, the Bank of Japan is expected to keep rates steady at 1% in tomorrow's announcement. Finally, the tone of Governor Ueda's guidance will be pivotal in determining whether the yen's strength holds. What are your thoughts? Do you believe the yen will continue to strengthen? Share your insights in the comments below, and don't forget to subscribe to Tokyo Macro for more updates.